Crispus, there's lots of earnings numbers out of three banks. I want to start with National Bank, which has a privatization coming up, 4% rise in its pre-tax profit to 486 million shillings. What are you reading in National Bank?
National Bank has been one of Kenya's success stories. Remember, in the last decade, we had a period whereby National Bank was really not making so much profit. It was weighed down by bad debt. But in my opinion, it seems to have woken up from that slumber. It seems to have fought, and like a phoenix, it's up.
But there's a
so going forward, I'm pretty bullish. I'm pretty bullish on it.
Excellent. The government is trying to sell a 51% stake in the company in a bid to try and professionalize it, but also to bring in the much-needed funds. Is this the right direction, do you think?
Yes. Remember, Larry, National Bank, the main customers are actually the government. We have the Teacher Service Commission, we have the Kenya Revenue Authority, the Kenya Revenue Authority. All that makes it for a good investment case for anyone who'd like to invest in it, because again, you're already assured of customers. It's a good case for the government. Also, remember, government and business in the next few years, we've always have a situation whereby government and business don't really mix that well.
And government has no business doing business?
Exactly. My point exactly, Larry.
Well said. Standard Chartered Bank also without results today, posting a 41% rise in its pre-tax profit to 3.3 billion shillings. It seems banks overall still outperforming other sectors. We had Barclays also out after market hours yesterday.
For Standard, the banking sector in Kenya has continued to grow. We have seen for the first quarter results, all of them are looking beautiful from where I'm seated. Standard is a case of they've stuck to their strategy, even though the times, you remember during the rush for the retail clients, they didn't really go out that much. So they were not that much exposed by the retail, to the retail segment. In the last few, it's been the corporate segment that has driven it up. Actually, their profit came from a decrease, was actually contributed by a decrease in a loan loss provision, and also a good environment for interest rate. The interest rates were also fast going up and a bit sticky coming down. So they were able to profit that much from it.
The high interest rates right now are in their favor, but what are the risks here for banks? What could hurt their profitability going forward?
Inflation, one. We could have, for a bank that is hugely exposed to the retail segment of the market, we could have a case of bad loans, a bad debt book. That could hurt it a bit because again, inflation has really knocked off disposable income for most of the consumers in Kenya. And I'm thinking personal loans, people will have a bit of a challenge repaying their loans.
And KCB, tomorrow it's holding its annual general meeting. Its chairman, Peter Mudoka, and two other directors are retiring after exceeding the limit of 8 years. What this kind of change of leadership we're expecting, do you think it will have any major impact on the company?
Oh yes, because I think KCB has been transforming itself. You remember after the McKinsey report, really, I believe a change of, it's time for fresh blood, Larry. It's time for new ideas to take it to the next level. So it's a welcome change, and I expect the market to actually respond to it positively.
But chairmen really are in many cases ceremonial positions in Kenya, especially. They don't do much, or they're not involved in the executive roles at companies where they chair.
Larry, fortunately, you come from you are well aware of the Kenyan market. In my personal opinion, I think the KCB chairman played a very, very big role in the management of the affairs of the company. He had a big impact in its management.
Let's talk about the Kenya shilling. Today, the central bank back in the market, mopping up about $23.7 million in repos. The shilling was on a free fall for the last 7 days. What are you thinking about the shilling?
Again, we are seeing interest rates starting to come down a bit. So that would mean we're seeing a need. If you look at the bonds market, we are seeing a situation whereby interest rates are coming down. Yeah, so the government, that means there is a bit of liquidity in the economy. Guys are now able to borrow. So if it could create a situation whereby there's a bit of inflation, and that could further weaken the shilling. So I would actually support the CBK decision to do more repos, and actually I expect the CBK to come in again to mop up some excess money.
Speaking of bonds, it always tends to be eclipsed by the equities market. Have you seen any unusual activity or any interesting things out in the bonds market recently?
The turnover has been pretty good at the moment. We are having, compared to maybe the first quarter where we had low bonds trading turnover. So going forward, I expect a bit of activity. But remember again, the government is not that active borrowing. So that might, I think that will in the end push, try to pin down interest rates.
All right, Crispus Otieno, Investment Manager at 7 Hill Solutions, joining us out of Nairobi. Many thanks for speaking with us.